Hi, I'm Kerry Artak, Chief Analyst for WickedStocks.com. The video you're about to watch is one of many supplementary videos we regularly post on YouTube in order to provide you directional clarity regarding broader market trends across a wide range of American and international stock markets. But you should also know that at WickedStocks.com we provide regular daily market analysis in the SPY, that is the S&P 500 Spider ETF, the Triple Q, that is the Nasdaq 100 ETF, regular weekly analysis in the DIA, the Dow Jones, the IWM, the Russell 2000, and Gemini Bitcoin. And we also provide several individual stock picks a week, all of which can be found on WickedStocks.com. We're presently running half off your first month introductory offer. Subscriptions start at $25 a month and top out at $50, and you can receive half off those numbers by going to WickedStocks.com, clicking on the premium membership icon, and entering the coupon code HALFOFF. Our company mission is that our technical analysis bring clarity to your trading by sharpening your sense of market timing and direction, and I think we consistently accomplish that. Let us become an indispensable part of your trading strategy. Go to WickedStocks.com and become a premium member. You won't regret it.
Hi, this is Kerry Artak with Wicked Stocks, bringing you supplementary YouTube analysis in the Nasdaq 100 Index. These are all weekly charts, and I'm doing this the week of Monday, February 28th, 2022. This is the week of. I'm giving you basic numbers, basic structures in the Nasdaq 100. You're well aware, of course, that you may be well aware, I shouldn't be so presumptuous, but I also do daily Triple Q analysis. So all the formations that you're seeing here, I'm also doing in the Triple Q on a daily chart, updating them on a daily basis, providing meaningful buy and sell signals and sort of the directional dynamics from near to long term, as I will be doing here as well. And I just wanted to mention that, and I know you just saw that commercial. If you watched it, you know that I offer Triple Q analysis, and I'll just say this, that we're offering half off your first month. So if you wanted to subscribe to the daily Triple Q report, you could do so by going to WickedStocks.com and filling out the membership form. So let's jump into the charts. These are all weekly bar charts, and I'm providing you just sort of a basic breakdown of what I'm seeing. And if you've been following the Triple Q, or if you are a daily Triple Q report subscriber, this is all very familiar for you. We settled below this channel bottom the week of Monday, January 18th. That set off a sell signal to the longer term channel structure. And that was just a week ago, actually. Seems like a long time ago, but I actually recording this on Wednesday, March 2nd. So kind of in the middle of the week, and it was about a week ago, it was actually less than a week ago that we broke below that channel bottom. That is trend defining support over the last 2 years. That channel bottom is actually projected off the March 2020, I call it the COVID low. You can see that crash there. It doesn't look like much anymore, but at the time it was significant, as you recall. So this channel bottom comes in this week at 13,597.90 to the very tick, and it can absorb selling for the year. This is long-term trend support. Holding above 13,597.9 maintains a long-term bull market. Long-term, at least over the last 2 years since the COVID low. Upward momentum long-term remains intact above 13,597.9, despite the fact that we've corrected significantly off those November highs from several months ago. The long-term trend through the rest of the year remains stable to bullish. Now I'm going to show these formations. We'll actually zoom in just a little bit in this red square area, and you can see the long-term channel bottom still at 13,579, but we also have intermediate now descending channel tops, 14,563.34 this week, and the top is 15,195.05. Those are dropping at a pretty decent rate. And what I've been telling Triple Q subscribers is that we could quite easily, over the next month, 2 or 3, fill this area in. Having tested long-term support, this market is prone, I guess you could use that word, to rallying up to that 15,195 level over the next 3 to 5 weeks or less, on the way up to 14,563.34 channel top, if tested this week, can contain buying through next week. And from there, we could fall back within a couple of weeks to the 13,579. But I think having tested long-term support at 13,579, 15,195 is in reach. I'm going to say over the next 3 to 5 weeks. And if we were to close above 14,563 at the end of this week, that doesn't look likely at this point in time. But if we were, then 15,195 is just another week or two away, dropping weekly, able to contain buying into April trade, into the middle of Q2, let's say. We could top out there possibly through April. As these arrows suggest, we could trade inside this wedge for the next month or two. But I also will say that of the two extremes, 13,579 downside and 15,195 upside, the more likely to give way is 15,195. This just on account of the fact that the long-term trend remains bullish above 13,579, and it is the longer-term trend channels, the undertow, so to speak, that generally wins out. Now, there's a lot going on in the world, of course. And so, I don't really have to mention to you that we've got the Ukraine situation. We've got crude oil at significant highs and climbing. That's a whole nother video I think I did a couple of weeks ago. But I will nonetheless say that the likelier outcome is that we take out that upside resistance at some point in time, and then we continue on up and retest those highs from November, 16,764. That could take several months, and really it's only clearly indicated once if we close above that 15,195 descending channel top. Now, downside, we could actually close below 13,597. I don't have an indication that we're in an all-out bear market. Right now, after the November high and the sell-off that has occurred to present price levels, this is a mere correction in the midst of a longer-term bull market. But if we do close below 13,597.9 at the end of this week on Friday, and it really does need to be by a 1% margin, and that just sort of brings clarity to the sell signal. It's a more reliable sell signal. Closing Friday at 13,500 would be inside the 1% zone, and I would be reluctant to assume a longer-term bearish continuation under that scenario. So it is a Friday settlement of 13,461.92 or lower. That would set us on a bearish path, I think, through Q2, and then we're in an actual bear market that'll play out into mid-year, I suspect. Our first target would be the 50% downside retracement off that March 2020 COVID low against the November high. I think that could be in as little as 3 to 5 weeks. We could bounce nicely off there, but I think over the next 2 to 3 months, 3 to 5 at the most, we're looking for this rising two-thirds speed line at 10,646.65, and it is rising gradually. And that is a zone that would be, in my opinion, an objective. If we were to close below that channel bottom at 13,597 by the 1% margin, I would consider that a 3 to 5 month downside target that is then able to contain lows through the rest of the year. And from there, we just kind of take it 1 week at a time. So on the upside, I'll just throw this out there. That spike low from last week, the high of that low was 14,193 even to the very tick. And, we've pushed through that very modestly this week. But if we close above it, 14,193. That is one more sign that the likelier outcome is that we will continue in to that sort of wide zone of resistance, beginning at 14,563 and really ending at the much more meaningful 15,195. I think that upper one, 15,195, as I say, is the likelier outcome, and I'm going to give it about 3 to 5 weeks. That'll put us into anywhere from late March into mid-April, somewhere in there. And as I say, we could trade inside that wedge for weeks to come. But I do want to keep you abreast on YouTube of what I'm seeing in the Nasdaq 100. I think that this is pretty good right now. If we do close below 13,579.9 at the end of this week by that 1% margin, and then the sell-off continues, I will update here in the next week or two to apprise you of what I'm thinking. But until then, consider coming to wickedstocks.com and becoming a paid member of the Triple Q report. It's $25 a month, and you get half off your first month. So it's $12.50 for the next month to take a look at this analysis on a daily basis, and that's a tradable index, of course. Obviously you can trade the Nasdaq 100 through options and so forth, but you really can't trade the index itself. But you can trade the Triple Q, and there's a correlation of nearly 100% on that. So please click like each and every time you watch any wickedstocks.com YouTube analysis, and subscribe. Don't forget to subscribe to the wickedstocks.com. It'll apprise you of notification each and every time new content has been uploaded to the YouTube channel, and we put out at least several videos a week, sometimes daily. So stay tuned, and that's all I've got. Thanks for watching, and we'll talk soon.